You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. It is time once again for TWIFO. This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-engaging, at least we tend to think so, Options Insider Radio Network. Remember, if you like what you hear, this program, the full network, our app, wherever you get the content, could be on any platform under the sun these days, Audibles, YouTubes, you name it. It's all over the place. Throw some stars our way if your platform allows. It does help new folks continue to discover the content out there. And there are a literal legion of new people discovering these markets all the time. They need a place to turn, so your stars will help them do just that. And of course, if you want more content in your lives, and who can blame you, including a lot of content covering this particular market, the futures options market, then theoptionsinsider.com/pro is the place to go. We have great pro Q&A sessions touching all sorts of markets, including quite a few touching these, as well as options oddities, live streams, over 200 episodes waiting for you there already. Giveaways, early access to a lot of exclusive content like the great OIC content we recorded from the OIC event, all the panel audios coming through us. You can get all that stuff early over there. Theoptionsinsider.com/pro is the place to go to begin your journey to the dark side. Let's see who's joining us on our TWIFO journey this week. I am pleased to welcome back our old friend, Mr. Rich Excell, the clinical assistant professor of finance over there at the University of Illinois. Rich, welcome back to TWIFO, sir. It has been too long.
It has been. Good to see you, Mark. Good to hear you, I should say.
If you see me, you must have been planting bugs in our studio again here, sir. But I'm glad we got everything working, everything sorted out, sir, because it is time for the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we break down everything lighting it up to the light side, aka the upside, and to the dark side over there at CME Group this week. Mr. Rich, you know the drill by now. Where should we begin our journey, sir? To the light side or to the dark side?
Why don't we start on the dark side and then kind of end on a high note?
Sounds like a plan. I can get behind that. Right now, listeners, if you follow CME Group on Twitter, if you follow us on Twitter, you can see we tweet out the week-to-week performance report for you, so you can see how these markets have evolved since our last episode. If you did that, you would see we are hanging out roughly 50-50 green versus red, even though it looks like the larger movers overall are to the green this week, and there are just more of them in terms of dense movers. We have red, but they're kind of lighter here on the week. But nonetheless, to the dark side, we begin our journey this week. Number 5, we're starting off in the ags complex, in particular the livestock. It's lean hogs, listeners, off 1.92% this week, followed by number 4, back off to the metals, listeners. Copper off nearly 3.5% this week. Number 3, we're still staying in the metals. It's silver off 6.24%. It was number 3 in the other direction last week, up 4.13%. So a rockin' couple of weeks for silver and a lot of the metals. Number 2, I guess if you think it's digital gold, then we're staying in the metals. But actually, we're going on out to the crypto, listeners. It's Bitcoin off 6.31%. So there's 2 of our 3 frequent offenders right there. Well, one, spoiler alert, the next one's coming up because number 1, listeners, back off to the ags, this time to the softs. It is lumber off 7.37%. So there's 2 of our 3 frequent offenders back to back right there at the top 2 spots in the dark side. Now to the light side we go. Number 5 off to the rates. It's a euro dollar is up 5.71%. They were number 1 to the light side last week, up 7.02%. We all know euro dollar is kind of a pale shadow of what it once was out there. Number 4, RBOB up 5.8%. It was number 4 to the other direction last week, off 6.43%. RBOB, one of the energy complex participants that doesn't really light it up from an overall volume perspective. Usually when we're talking energy, it's predominantly dominated by WTI and nat gas, maybe a few others sneaking in there every now and then, but not too often is it RBOB, nor is it number 3. We're still staying in energy. It's heating oil, another somewhat light volume contributor out there, but it's up this week, up 6.02%. Number 2, back to the ags. It is KC wheat, listeners, up about 6.25%. It was number 2 in the same direction last week, up 4.31%. And the number 1 light side mover, listeners, back to the metals we go. It is palladium, up 9.43%. Again, another not exactly options stalwart making it into the movers and shakers this week, but a lot of action out here this week in the metals, a lot of action in the ags, a smattering in some energy. So we'll see where we hang our hats this week. But given how much ags are really lighting up our movers and shakers, and also I know you've been hanging your hat in the ags recently as well, Mr. Rich. I think we're going to start there first.
It's time to get our hands dirty exploring the latest options trades and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everyone. Welcome to the wonderful world of ags. You know where to go to find this report and everything else we're going to talk about here on the show today, listeners. CMEgroup.com/TWIFO, TWIFO is the place to go. And then from there, you're going to go right to the top of that asset class list. It is an alpha order list. After all, going to go to ags. And then we're probably going to hang out in grains and oil seeds. Where we go from there is anyone's guess. But Mr. Rich, I know you've been looking a lot at the ag markets. In fact, you just put up a new report just in the last few days about global trends and volatility in the ag markets, particularly corn and wheat. So let's start there, Mr. Rich. Break down your report and some of the interesting findings you found out there in those 2 markets from an overall vol and indeed global trend perspective, sir.
Sure. Yeah. I mean, I find that the right now the ag market is particularly interesting to me because you kind of have crosswinds going on. You have these major long-term trends of population shifts going on in Asia, right? We've seen maybe perhaps the peak of Chinese population growth, but it's still, just maybe now it's number 2 in population behind India. They crossed this year, but it's still a major population center But India is rapidly growing and expected to continue to grow, and this has implications for food tastes, food consumption, food trends, et cetera. Especially as many of those people are moving into the middle class, developing more Western tastes, therefore more demand for wheat, et cetera. And so there's a lot that's kind of going on there in this kind of big picture trend. But then you kind of dig into the weeds a little bit, and there's a lot going on this week and next in terms of near-term catalysts. And that's what I was focused the most on in this ag report, because tomorrow we've got the WASDE report coming out, and then next week we've got the expiration of the Black Sea Agreement, which is the agreement where Russia and Ukraine have agreed to export both of their wheat products into the global markets to kind of hold back some of that price increase that we had seen last year, which was causing a lot of pain in a lot of countries. And that is expected to expire. And there's been talks going on for the last 8 days or so. So far, as we're recording this, there's no agreements reached. And this has meaningful implications, not just for the wheat market, but also for the fertilizer market, because that's a big source of a big center for fertilizer around the world as well, which impacts more fertilizer intensive crops like corn, et cetera. So I think corn and wheat, to me, with both the WASDE report coming out tomorrow and then next week, the potential expiration of the Black Sea, really set up as super interesting markets. And there's been more and more interest in them from global players because of these global trends. And then I think layer on top of all that, the interest that we've seen in the weekly options in ags. I mean, we've been talking about shorter and shorter expirations for every product. It seems every time I get on the show, there's more and more. And the weekly options are exploding in popularity in the ag markets too. To me, the best thing about the weekly options is that you can really isolate these particular catalysts when they come up and express your view around a particular catalyst. And that's what I was focusing on the most in this report.
Now let's get into it. I know you have some trades you want to talk about in a little bit too. We'll dive into the products first, and then we'll get into each of the individual trades. It sounds like we'll start in the land of wheat first. It is, of course, as you mentioned, top of mind. We do have that agreement ostensibly expiring in the next week or so. So that could have, as you mentioned, a lot of ramifications for the wheat markets and a lot of the other global ag market as a whole. We all know KC wheat, not exactly a huge volume leader, about 20-odd thousand contracts on the tape right now. So we're going to shift our attention over there to Chicago wheat. They're doing about 106,000 contracts right now. So a little bit more robust paper to sink our teeth into. Where is SRW wheat right now, listeners? 627 and a quarter, off 33 handles, or about 5% this week. So a lot of movement out there, of course, ahead of the big report coming out soon as well. So a lot to unpack here. Talk about the crop report, Rich. I just get thoughts of trading places, right? And going out to steal the FCOJ report.
Absolutely.
Good times, listeners out there. There wasn't a single day on the floor of the SIBO where someone didn't yell, "Turn those machines back on." So that movie had a lot of resonance for a lot of people in these markets. Right now, like we said, Chicago wheat 627 and a quarter, off about 33 handles. In terms of paper, like I said, about 106,000 contracts, nearly half of that, 45%, coming in the June contract. It has about 15 days to go. So that's right in kind of the sweet spot for us. Rich is talking about the weeklies. That's going out a couple of weeks in the weeklies. It's also where we kind of like to hang our hat. And it's also not exactly a 0 day, so it's not all expiring within the next few minutes, which makes it refreshing as well. What is the vol out there in the June wheat right now, listeners? It's about a 35 and a third, off about a point, but still pretty frothy. Certainly you compare that to equities or a lot of the other complexes we're going to talk about here on the show. 35 is getting up there. That most of the products we talk about here on the show, listeners, are somewhere in the low 20s to the mid to high 30s. They tend to top out there. We have a few exceptions. Obviously, nat gas is usually there. Crypto usually there. Maybe we'll talk about that a little bit later in the show as well. But a 35, nothing to sneeze at on the broad spectrum of volatility over there at CME, listeners. In terms of skew, the puts last week, 5.1% cheap. This week, about 6% cheap. So hanging out at a similar level to last week. The calls last week, all the attention was on the calls. A nearly 9% bid, 8.7% rich. So you had a strong bid to the calls, a decent discount to the puts. So a nice little setup for collars out there in June Wheat this week, that bid has come in a bit. The puts, or I should say, the calls are 4.7% bid now, so not quite as attractive as it was this time last week. You can't get as much premium for those 25 delta calls as you could last week, but still an intriguing setup overall. And in terms of action, what was the big dog out here this week? I said we're at about a 627.25, listeners. It was the par puts, the 600 puts in June, leading the dance this week with about almost 7,000 contracts on the tape. The big day today, 3,200 today, so almost half of that going up today. About 2,000 yesterday, almost 1,000 on Tuesday, and only a few hundred on Monday. So opening yesterday, obviously we don't know about today's paper, but that's given the fact that there's only about 2,400 contracts open, I'm going to have to assume that's probably opening out there. So a lot of paper there on the 600 puts. Behind that, we have actually the 700 calls, so the pars in the other directions out in July, doing nearly 5,000 contracts, coming in at the number 2 spot. For those were pretty active almost all week long, with the exception of Wednesday. They did 1,600 contracts on Tuesday, about 1,500 today, 1,300 on Monday, and only a couple of hundred on Wednesday. It looks like mostly closing earlier in the week. So it looks like folks were bailing on these July 700 calls earlier this week as well. Let's see if anything else is catching our eye, lighting up our tape out here this week. Looks like it was 720 calls in June that are going away again in a couple of weeks. Doing a lot of paper. Most of that today, almost 4,000 contracts, 2,800 of that today. So a lot of action today in Chicago wheat, which is kind of interesting. 720 is going up 2,800 times today, 1,000 times on Monday. Not much to speak of the rest of the week. So kind of a bit of a staccato burst of paper there for the 720 calls here in Chicago wheat. Rich, does any of that kind of surprise you out there when you're hearing me break down the paper? Then I know you've been working on some intriguing trades. What trade do you have up your sleeves for us in wheat these days, sir?
Yeah, no, it's interesting to hear that, especially when you're talking about the demand or the interest for on the call side in wheat, because it's been a pretty relentless decline in the price of wheat for the better part of the last year, really, but certainly this year. And what I was also looking at, again, around these catalysts was what has been the reaction on the previous report, the WASI reports, for instance, this year. And what we saw is that corn, while it has largely been in a bit more of a range than wheat, it seems to react a lot more to these WASI reports, whereas wheat doesn't seem to react very much. It doesn't change its trend very much and continues to kind of just bleed lower regardless of this news. So what I was looking to do, and there was a fair bit of open interest kind of building up around these events. So I wanted to focus on the recent trend in corn has been a bit lower. So focusing on some upside and focusing on the catalyst for this week as the thing that would change the trend as we had seen in the previous reports, and looked at buying two upside calls on corn expiring this week, and funding that by selling options that expire beyond the Black Sea Agreement expiration on May 18th. And then, that was, to me, was the idea that where I could take advantage of this particular catalyst, and then kind of, use this proceeds and do this as a way to, do it on a zero cost basis, where I was able to buy 2 near dated calls and sell 1 far dated call. So, there's clearly risk on that, right? So if the WASI is a non-event, my calls go away, and now I'm just short a call around the Black Sea. But I was relying on the fact that this WASI has been a bigger catalyst, and looking to get that leverage and being long those 2 calls, or conversely thinking that if there was going to be something on the Black Sea, it might happen even before the WASI report as well. And so that gives me some leverage to the upside in the near term, with the risk that I'm left net short of a call option in corn. I actually looked to do something on the opposite side for wheat, and look to sell the near date and buy the further date, because again, WASI hasn't been the big catalyst for wheat in the past, and I was looking for calls in wheat around the Black Sea Agreement, with the idea that if nothing is agreed upon, then this is supply that would be taken off the market, presumably, and therefore that should maybe lead to some upside in wheat, where we've had just a relentless move. So I was looking at this where you could do it either one of them, depending on your views. which you thought was the bigger catalyst. But even in concert, then if you did them both, you're kind of left where you don't have much premium outlay at all. At the very least, if you get no near-term move, if you have a near-term move, you have leverage to the upside. If you have no near-term move this week and you're going to next week, you're short a corn call, but you're long a wheat call. And so you would have a relative value spread on at that point. So again, trying to think about how to use these weekly options, how to look at when these particular catalysts have moved markets in the past, where the interest has been, where the price action has been, to suggest how are people leaning, et cetera. Where might people get some information that would change their opinion? And that's what I was trying to layer together in the report this week.
Yeah, it's interesting. I like that. It's an interesting premium neutral way to try to get your swing at the bat for the report coming out this week, using some of the premium from the coming weeks to do that. Now, you kind of touched on this, but obviously with that type of position, obviously, if you don't get the move this week, you're kind of left with the short position. So is the plan that if you don't get the pop you're looking for out of the WASD report, you would just close the whole thing out, or are you going to let those naked short legs out there, you're going to let those ride?
Yeah, I mean, if I did both. So I'm left with a relative value. But if I just did the one, for instance, on the corn, yeah, I would, from a risk management perspective, I would look to close the whole thing down. Now, the idea would be it would still cost me some premium to close that down, but the overall corn volatility, at least over the last week, are kind of at near-ish 6-month highs, and so. But the hope being that once this kind of May WASI report's out of the way, volatilities might come down a little bit, so I wouldn't be covering it at such a cost. And so I would get leverage to the potential move. And if nothing, I would have to kind of cover it at a cost, but the cost should be moving in my favor. So it would be a small net loss, but something I could stomach. Yeah,
you never want to leave it. A naked net short leg out there, especially with such a big potential catalyst lurking around the corner. It is an intriguing approach if you think about one of these listeners. Of course, with the caveat, if you do the long two and then short farther out, your broker probably going to margin you mostly on the short side. So it's going to be a pretty hefty margin requirement for these types of trades. Brokers always get skittish when they see naked short legs. Even if you are covered in the near term, they're going to go beyond that and say, well, next week you're naked short. So they're going to margin you that way. So just bear that in mind. There is no free lunch in the options world. I wish there was, because then we could all eat for days, listeners. But intriguing stuff nonetheless. Speaking of intriguing stuff, and you touched on corn there, Rich, let's go out there as well before we roll on out of ags. Corn, obviously, the mothership of the ags complex, and living up to that moniker again today. Over 400,000 contracts on the tape, 413,000 to be precise. So a decently active week for corn. Where is corn hanging out right now, listeners? That front future at 582, off about 14.5 handles, nearly 2.5% this week. So a little bit of a drubbing out there in corn as well. In terms of the paper, almost 27% of it going up in the July contracts. We're going to hang out there this week, listeners. That has about 43 days to go. So refreshingly longer term. A lot of these contracts, as Rich was alluding to earlier, a lot of these products just live in the weeklies and indeed even in the front day these days. So having a chance to go all the way out 43 days, it feels like a rare treat, listeners. Let's take it when we get the opportunity. In terms of vol, 25 and about a third. That July vol actually ticking up about 1.5 points. So again, kind of fitting well within that range of roughly 25 to 35 that a lot of our products here at CME fall in. This one at the lower end of the range. Obviously, wheat kind of at the higher end of the range. In terms of skew, man, there was all about the calls last week. Nobody wanted the puts. The puts were about 2% cheaps to the at the money, so effectively flat. But the calls last week, 13.4% bid. My goodness. They wanted themselves some calls in July last week. All that is gone this week, listeners. The calls only 1.8% bid, and the puts are still about 2% cheap, so pretty much flat. So if you were hoping to take advantage of some juicy upside premium in July, unfortunately, that has gone the way of the dodo. In terms of action, it actually wasn't July that had the most active contract. It was the June 600s, the June pars, doing almost 15,000 contracts this week. That took the top spot out there. The busiest day was actually Tuesday, 5,000 going up on Tuesday. 3,400 each yesterday and today, and about 2,900 on Monday. It seems like slightly opening throughout the week, so that's kind of intriguing. Maybe not exactly what I would have assumed, but we are kind of flirting with that 600 strike. So I guess as we broke through it, flirted with it again, people continue to slightly open with a lot of back and forth paper on this par strike. And then right behind it, we have the 640s in July going up about 11,000 times. That was the number 2 most active contract out there. The big day for those was actually Wednesday, about 5,800 contracts on Wednesday, mostly opening there, 3,500 on Tuesday, mostly closing, 1,200 today, only about 500 on Monday. So very concentrated in Tuesday and Wednesday out there, listeners. And it was kind of all over the place, which is kind of interesting. A whole bunch of liquidity across the term structure here. If we go out to the 480 puts in September, yes, September, listeners, they're coming in at number 3 with about 10,300 contracts. For those, the busiest day was actually Wednesday, 5,200 on Wednesday, 3,600 contracts on Monday, 1,200 on Tuesday, only a couple of hundred today. And again, back and forth. So we're kind of all over the place, listeners. 600s and 640s to the upside in June and July, 480 puts to the dark side there in September. Yeah, interesting paper, kind of just across the board here in corn, which again is kind of refreshing. I don't mind the 0 day. We talk about it. We love it. Obviously, you folks love it, but it is refreshing to go a little bit farther out than a day. Rich, how refreshing is it to talk about ags and not be, I know you're talking about the weeklies, but we're not obsessed with everything that's happening right now, right today, which is kind of nice. And then B, anything surprising you out here in the corn paper I just broke down, sir?
I think it's, first of all, you're right. I think it's great, like I said, around a catalyst that the weeklies can really be a trader's best friend. I'm not the one who wants to kind of be in there on all the daily options, et cetera, and the high maintenance of it. That's just not my interest or style. But again, around catalysts, I think it's great. But I think for people that the end users that have a little bit more hedging to do, and where we see a little bit more liquidity going on in those kind of end user portfolios, I think it shows you the uncertainty that people have about a lot of different markets, and the ag market is no different, right? We're really we don't know what's going to go on with catalysts. We don't know what's going to go on with demand, what's going to go on with the economy, et cetera. So I think there's just a lot of uncertainty across a number of different products.
Speaking of those products, we have to keep on rolling. In addition to ags, we had a lot of metals in our movers and shakers this week, listeners. So we're going to hang out there next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, welcome to the shiny stuff. Pop out of ags, go almost all the way down to the end of the list. Metals, one from the bottom there. Then we're going to mostly hang out in precious. Maybe we could be convinced to get a little base if you are so inclined as well, listeners. We had silver, copper, and palladium all lighting up our movers and shakers this week. So a lot of metals catching our attention this week. Mr. Rich, metals, usually when we have the Fed in the limelight like we do right now, everyone's talking about inflation, what the Fed's going to do. The other side of that coin, often we see a lot of discussion and interest in the shiny stuff. What's catching your eye out there in the world of metals these days, sir?
I'll tell you, the thing that's catching my eye the most is copper, because, copper obviously is super tied into the global economy through all of the, housing and plumbing, et cetera, but also the electrification of the economy. It's tied into both the U.S. and China. A lot of excitement in terms of China reopening earlier this year. The data we've gotten in the last week or so suggests that might be fizzling faster than people thought. And I think you're seeing copper under pressure as a result of that. So to me, I like to look at copper. And frankly, the copper to gold ratio to me is a great tell from the metals market about what the metals market is thinking about the global economy. And so that's where I focus a lot. I mean, silver, obviously some economic uses in there too. So you don't want to ignore that. And palladium, I thought was interesting to see the move on the light side this week. I'm wondering aloud if that, I don't know, but is that something to do because Russia's a big producer of palladium too, and maybe that's all tied into the same catalyst. But copper to me was the one thing that really caught my eye.
All right, Rich wants us to get base, so we can do that quickly, listeners. Not a ton of paper on the copper tape. When we first started doing the show years ago, copper would only do a couple of hundred contracts in a week. These days, a lot more. We've done many weeks where it's done over 30,000 contracts. This week, a little bit quiet, about half that, about 15,000 contracts. So not going to spend a ton of time getting base. But that said, it is selling off again this week, as Rich alluded to, off about 18 cents, trading right around a 370 right now, listeners. And of that kind of light amount of paper, pretty much half, 50% almost exactly, going up in the June contract. Has about 14 days to go. Copper vol, right at the lower end of that range, about 24 and a half, so almost 25, up about 2 points. So kind of hanging out right where we expect a lot of these products at CME these days to hang out from a vol perspective. Last week, the puts were leading the dance, 5.1% bid. This week, 3.9% bid. The calls last week, 2.4% cheap. This week, 1.6% cheap. So skew coming in on both legs out there. Again, on pretty light volume. The most active contract out here this week are the 4 calls in June, doing about 800 contracts here on the tape. So again, not a ton of paper for us to sink our teeth into out here in copper, but an intriguing one to watch nonetheless, because of course, as we know, copper very much a surrogate for what's going on in China. And again, looking a little bit weaker out there this week. A lot of the metals are looking weaker. In fact, we mentioned our friend silver. That has been moving and shaking all over the place. It's been on quite the run of late, so not exactly surprising. Maybe it would take a bit of a break, and that's exactly what it's doing this week. Trading right around 24 and a third right now, off about 1.5 points, nearly 6% to the dark side. So again, retreating after hitting some lofty highs earlier here this year. In terms of action, a little bit more paper than copper. We got about 32,000 contracts on the tape for silver, and about 40% of that going up in the June contract. Again, 14 days. That's the sweet spot today. 14 days, for whatever reason. All the products we're talking about here today, they all want to do all their paper 14 days out. Well, who are we to argue, listeners? In terms of vol, again, kind of in that sweet spot range, right around a 27, off about 1.3 points this week. In terms of skew, a whole heck of a lot of nothing last week. 2% bid were the puts and 1% bid were the calls. So mostly flat. This week, 1.5% cheap were the puts, and then 5% bid are the calls. So a little bit of a call bid ticking in, which again, if you know anything about the shiny stuff, historically, listeners, that's the way they usually shape up. Discount to the puts, bid to the calls, kind of an inverse of what we see in a lot of the equity products out there. And at least a little bit of that showing up in June silver this week. And in terms of action, it was the 24.5 puts out here in June, doing about 1,100 contracts. That was the big dog this week. And since we're hitting on the shiny stuff really quickly, we can't get out of here without talking about the big dog, which is gold. Looking pretty big again this week. Nearly 250,000 contracts on the tape for gold. So kind of puts all the rest of the paper in the metals complex into perspective when you talk about the big dog here. And of that, by the way, gold right now, a little bit north of 2,000, about 2019, off a little over 5 points, about 5.5 points, or about 0.25%. So still staying north of that psychologically important 2,000 level, at least in that front future. And of that, about 250,000 contracts, almost 30% going up in the June contract. Again, 14 days. This is just, I don't know what's going on, Rich, with the 14-day time frame. That's apparently where everybody wants to play this week. The vol in gold, again, gold, one of the few outliers. Gold never been known as a big bastion of volatility, and that's the case again this week, about a 15 off about 1.5 points. One of the few products that's kind of outside of that range we typically talk about, and outside of it to the downside. It's going to be gold, and some of your rates products are really kind of bringing up the doldrums in terms of low levels of vol out there. In terms of skew, last week the puts 2.2% bid, and the calls were 4.3% bid. This week the puts 4.6% cheap, and the calls 7.2% bid. So calls catching a bid, puts catching a discount. Again, that's kind of historically the pattern we've come to expect out here in the shiny stuff. In terms of action, we had the 2,100 calls. Again, we're hanging out at about a 2019 right now. 2,100 even, doing almost 11,000 contracts this week. Trading almost even all week long. 25 to 2,800 contracts pretty much every day this week. Slightly opening to closing. So a lot of, looks like back and forth paper on the 2,100 calls here in June this week. That's our number one most active contract. But, you know, if you listen to the show, listeners, you know, if you go farther out in gold, that's where you see a lot of the action. Farther out and farther up the strike chain. So we're going to do that as well. Looks like the D's 3000s, listen. Yes, the D's 3000s lighting it up 7,100 times this week. Again, kind of active all week long. The big day for those, so almost half going up on Tuesday. 3,400 on Tuesday, slightly closing there. 1,700 yesterday, 1,300 today, about 600 on Monday. Back and forth, opening to closing throughout the week on the D's 3000s. It looks like it might be some activity with the 2,500s as well. There could be some vertical action. Doesn't line up quite 1-to-1 though. So if they were closing on Tuesday on the 3,000s, maybe they roll down a bit. There were about 1,700 contracts going up on the 2,500s that day, mostly opening. So they could be taking the opportunity to roll down a little bit. Either way, D's 3000s, listeners, does that strike intrigue you out there? All right, Mr. Rich, we did a quick run through of the copper and silver, and of course the big dog here, which is gold. Anything catching your fancy? And are you a fan of the D's 3000s, Rich? Because it sounds like somebody's trading them.
No doubt. I mean, the D's 3000s is interesting. That to me is the that's a tail risk hedge, right? That's a debt ceiling problem. That's a continued end of dollar hegemony, and then there's a lot of talk about that where we're seeing things no longer priced in dollars, or people going to be, our country's going to be shifting out of there. Central banks have clearly been buying gold, so maybe that's just a tail risk and a really difficult and volatile summer, perhaps. I think it's interesting for sure. I don't know if I kind of fall. I think I would probably be willing to take the other side of that, but I think it's a very interesting idea.
Yeah, it's an intriguing. I think I probably could take the other side of the D's 3000s as well, but intriguing stuff here nonetheless. You know what else is intriguing, Rich? I know you were doing some trades in it recently, and it's also once again in our movers and shakers this week. It's number 2 to the dark side. It's Bitcoin. So let's talk a little bit of the old crypto.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, listeners, ags, metals, and now crypto. That's why I love this show. You never know what you're going to get every week. We kind of tried to cover the gamut of intriguing products over there in the land of CME. Right now, we're going to pop out of metals, go all the way up almost to the top of the list. Right below ags, you're going to find cryptocurrency. Then you go in the product family indexes. We'll start in the big dog. Then we'll get into the micro fund as well. Then we're going to hang our hat first in Bitcoin. Bitcoin options actually starting to do some paper again out there. And I know, Rich, you were looking at all things crypto, but it looks like I know you were also talking about our friend ETH out there. So what's been catching your eye, and what trades have you been up to in the crypto since the last time we chatted, sir?
Yeah, I've been focusing more on ETH for sure, but I think Bitcoin is interesting. I think a couple different things going on with Bitcoin. One is that same sort of potential flight to safety away from the dollar around any sort of events that are going on. Two, I think ultimately when I look at it, I mean, I kind of put Bitcoin and Ether into the same category as what we see with a lot of the U.S. tech stocks in terms of what I would call long duration assets that need easier financial conditions to do well. And we've seen those easier financial conditions here for the last several months, actually, since fall of last year. And we've seen a really nice bounce in these riskier assets. And that's a lot to do with what you were talking about before, which is with Fed policy and the expectation of a Fed pause, maybe even the expectation of Fed cuts. So I think that to me is what's driving Bitcoin the most. I think ETH has some more specific idiosyncratic catalysts that's been driving it. And so that's what my report was focused on, was the most recent catalyst, which was the Capella upgrade, which is the combination of the Shanghai and Capella upgrades. And this is kind of the finalization of what happened last summer when we talked about the merge, which is the big catalyst in ETH, where the network was shifting from proof of work to proof of stake. And this upgrade is really kind of finalizing the rest of that to where now not only is the Ethereum network fully proof of stake, but now you've got the ability to offer a variety of different products on that network, various decentralized apps that provide yield. And that's something that there's been a lot of the critics of crypto have been very negative on, is that there's no yield. So how do you value these things? There's no cash flow, et cetera. There was some argument on the environmental aspects. There's again arguments on that there's no cash flow. Well, Ethereum's answered both of those here in the last year by first shifting to proof of stake, so it's no longer proof of work, so it's not a big environmental footprint. And now, because of this latest upgrade, you can get a fair yield on staking your ETH. To staking meaning to put up your ETH as validating the transactions on the network. And depending on the type of account you have, I mean, institutions are going to be able to access a bit higher yield, but even in retail that are kind of going in through a more centralized exchange, you're going to get something north of 4, maybe even north of 5% on staking yield, which in a world where, we've seen how much money have we seen leaving banks going into money market accounts in search of higher yield, that's going to draw some interest, I think. And I layer on top of that all the other interest that's kind of coming from technology developers looking to build more applications on top of this network. And you can get a yield as well as be exposed to some potential interesting disruptive technology. And that's where I think a lot of the riskier investors, to me, are going to potentially find more interest in looking at ETH versus even looking at the NASDAQ. And that's kind of what I talked about around these ideas. And as you mentioned, institutions are increasingly using CME futures and options as the kind of the primary source for where they want to express their views and use some of their end using hedging. With a lot of the problems that the crypto complex had in 2022, institutional investors, in my opinion, and we're seeing it in the volume, are really kind of gravitating towards the exchanges that they can trust and the products that they can rely on. That's not the case for necessarily every global retail investor, and that's a lot of the volume in some of these crypto. But I think you see that in the CME products. And I was focused, the strategy I was focused on, with a bullish bias, but where much like the merge last year, was a catalyst that everyone saw coming. And it was a bit of a sell the news type of a catalyst, but the trend then ultimately, kind of took over and moved in the direction everyone thought. It just took a little bit longer. And that's my thought is doing the same thing around this Chappelle upgrade, that it might fizzle a little bit in the early days after this catalyst, but then resume on its trend higher. So looking for a low volatility way to play a bullish idea. And I went to what I call a split strike butterfly. That's what we call them, the places I worked, which is kind of strike, not an asymmetric butterfly, but one where the far upside strike is a little bit closer by, so that if you do blow through all of your strikes, you still lock in some gain, but where you are selling some of that meat in there to reduce the overall cost and give you a much more favorable reward to risk. And I was looking to do something like that in ETH out in June. And that was the idea that I put up, again, around these catalysts and using these catalysts as the reason for me wanting to enter into a trade.
How many other shows, Rich, talk about crop reports and then ETH upgrades in the same show? I defy you. Find me one other show that talks about all that kind of stuff. We cover a wide gamut here on TWIFO. But I thought that was intriguing, your upside play, because you're right. The merge last year, everyone was so hyped for it around all things ETH, and it kind of turned out to be a bit of a non-event from an underlying perspective. We saw a decent amount of options paper leading into it. Coming out of it, not so much. But this is intriguing here. You're swinging for the fences, 2,200, 2,500, 2,700 broken wing / skip strike / split strike fly out there in June, sir. So you're not messing around, Rich. You're going for some upside in ETH in the next couple of months.
Yeah, for sure. And again, I think there's, when I focus on this, again, I think the trend would reassert. I think the yield is very, very attractive. And I think to the extent that there's any sort of volatility wobbles and people wanting to get out of some U.S. assets and into non-U.S. denominated assets, I think this would potentially be a beneficiary of that as well.
Yes, I've been staking my ETH for a while. It is an intriguing process out there. I know they've made some changes to how all of that works, and certainly interesting stuff going on out there in the ETH world. Let's go shift out of Bitcoin then, look at the ETH options, the big ETH options first. 700 or so contracts on the tape, not a ton, but then again, ETH hasn't been around that long, the big contracts, and they're still looking for that next leg up, I think. I'm curious for you, Rich, as you were pricing up your spread, you even mentioned in your trade something I've mentioned on this show many times. It seems like ETH options, a bit of a staccato product. They're on, then they're off. They'll trade a bunch, then the next day, not much at all. Did you find any issues from liquidity and pricing up a spread that wide? Was it kind of challenging to get into or maybe get out of down the road?
I mean, definitely, it's a product that still requires a little bit of patience on the execution front. And so, I look at this and I say, think to myself, okay, this is something that I might need to stage into over a few days. You don't want to press it, right? Because that's ultimately just going to negatively impact your reward to risk. But I think that there's enough volume that if you have a little bit of patience and you're disciplined on price, you can kind of get in and out as you need to.
I should mention you're doing this in the big ETH options, right? Not in the micro, correct?
That's correct, yeah.
Why did you choose that one versus the smaller, more bite-sized contract?
I just feel like that's where, for me, I think that's where the most interest is going to continue to reside, because I still see that the CME, Bitcoin, and ETH is more readily being adopted in my mind by institutions versus retail.
Well, it seems like this is one of those weeks where I said the big ETH options doing about 700 contracts. The micro, though, starting to put a little bit of paper this week, almost 16,000 contracts on the tape. Again, not blowing the doors off. It is a micro after all, but compared to some weeks where we've only seen, 1,000 or less some weeks, nearly 16,000 this time of the week. That's a decent clip out there. Looks like by the way, ETH hanging out right now, a little bit north of the 2,000 level, 2,004 in that front contract. So a bit of a lift out there. So on the way, Rich, to your 2,200 level there. And speaking of 2,200, looks like somebody agrees with you, Rich, because we have the June 2,200s going up 9,600 times in the micro ETH options, 5,500 times on Tuesday, 1,000 times on Wednesday. So it looks like, Rich, maybe you inspired some paper here. About 6,000 of the June 2,200s going up. Maybe they read your trade, Rich.
We can only hope.
So intriguing stuff. Looks like the micro ETH options are on again this week. Listeners, have you been playing in the micro contracts here, Bitcoin or ETH? Let's check the micro Bitcoin really quickly as well, because that was in our movers and shakers this week. And micro Bitcoin doing 2,300 contracts by comparison. So clearly all things ETH hot again this week. But it's always hot, listeners. It's your questions, your feedback. Let's get to it now. A little bit of the old futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everyone, welcome to your segment, the Futures Options Feedback segment. You guys know where to get at us, at Options on most major social media platforms. Questions at theoptionsinsider.com. Also works for those of you hanging out in the pro and the live. You can also use the live chat or the members hotline to get at us straight away as well there. A couple of intriguing questions floating around out there for our audience right now, Rich. We were talking on our last show about how the Fed Watch over there at CME pricing in nearly 50% probability of a rate cut as early as the July cycle. That sounded a little, shall we say, crazy to us. So we put it out to our audience. Our audience, Rich, at the end of the day, is the ultimate arbiter for these things. We said to you, hey, do you think that's going to happen? Yes or no, that's completely insane. And right now, Rich, 88.9% of our audience says that's completely insane. Only 11.1% say they're looking towards a rate cut in July. So glad to see we have some sane folks in our audience. But our actual question of the week this week, Rich, is kind of an intriguing one. Very much dovetails what we talk about on this show. These are obviously crazy times. We're getting a lot of questions in our pro Q&As about things like how people should be structuring their portfolio right now. Should they be getting out of stuff and heading to cash? So we thought we'd put this question to you folks, listeners. In these troubled times, where are you allocating the majority of your portfolio? Cash, crypto, equities or commodity/fixed income? And before you write in, I know a lot of you have written in, why are commodities and fixed income in the same bucket? Because it's Twitter, listeners. We can only do 4 selections at the end of the day, and crypto had to be one of them. So commodities and fixed income, they drew the short end of the straw. That said, Mr. Rich, if you have any thoughts on this for our audience in terms of where they should be allocating right now, have at it. And then B, more importantly, what do you think they're choosing out there? Are they choosing cash, crypto, equities, or commodities/fixed income?
Well, I mean, for me, I would say cash. I think cash, you're getting paid to wait. I think cash, and then spending a little bit of that yield that you can pick up on some tactical option plays around particular events makes the most sense to me. What would I guess your audience is? Again, you just talked about how rational your audience is. So I would not necessarily think equities, but there's clearly a bid to the equity market right now. And so I wonder if there isn't a bit of FOMO creeping in, even amongst your otherwise rational audience.
We do speak to, shall we say, the hardcores out there, Rich, which makes this result even more intriguing. Actually, even amongst our hardcore options audience, 41.8% are in cash right now, Rich. So that is intriguing to me. And again, you're not the first of our guests. You're one of many guests recently to kind of extol the virtues and indeed the optionality of cash. You're getting paid a decent clip to kind of sit and wait on the sidelines. You can kind of pick your poison. Obviously, inflation a concern there if you're sitting in cash. But right now, the optionality of cash seems to be winning. 31.3% saying you're still in equities. You're riding that roller coaster. 17.9% say commodities or fixed income. So for each of you out there who are writing in saying they should be in their own buckets, well, even combined, they can only muster about 18%. So I guess we made the right choice there. And then bringing up the rear is crypto. Crypto was leading early on, Mr. Rich, and now it has been pushed aside. But does that surprise you that so many of our, shall I say, savvier listeners are hanging out in cash right now, Rich?
No, not at all. In fact, I wrote something on LinkedIn today comparing the earnings yield of stocks to the Fed funds rate and just showing that there's no margin of safety. I mean, it's essentially the earnings yield, which is the inverse of the PE multiple of the S&P 500, is the same as the Fed funds right now. And when that's happened in the past, that's happened in like 06, 07. It's happened in 99, 2000. Usually, I mean, it can last for a long time, but it's usually not the optimal time to be taking risks in those markets. And so it doesn't surprise me at all. I think it's the right idea, and you can look and you can express your short-term tactical trades via the options market, and then kind of take the risk off and move back into cash and keep clipping those coupons.
Keep clipping those coupons indeed. Unfortunately, listeners, that music means we've come out of coupon clipping time on the show for today. But before we go, Mr. Rich, if folks are intrigued by your trades out there in ETH or the ags or the metals, and maybe they want to check out more of what you're cooking up, where should they go? What should they do?
Well, the best place to go is you can get my Excell with options reports on the CME Group website. So certainly go to there. You can sign up and subscribe and get those reports that come out every other week. They can also follow me on Twitter, LinkedIn, or follow me on Substack as well. So because I'm putting out content every single day on different subjects that sometimes related to the futures market, sometimes related to other parts of the markets and economy. So there's a lot of different ways to find me, and I'm talking about a lot of different things.
There you go. Check them out over there, listeners. And, of course, you can find his reports where you find our reports. CMEgroup.com is the place to go. Check out the Excell with options reports for all of his trades there. And, of course, CMEgroup.com/TWIFO is the place to go for all of the data we talked about on today's show and a whole bunch more. A lot of fun going on out there. That's going to do it for the fun, though, on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, for a little bit of the old volatility views. There's some volatile view out there, listeners. It's kind of a stealthy, busy market out there. So we'll break that down tomorrow. Vol views, noon Central, 1 p.m. Eastern. After that, for all you pro folks, we come back exclusively for you folks with Options Oddities. So if you want to check that out for yourselves, you don't want your broadcast day to end after vol views, then of course, theoptionsinsider.com/pro is the place to go to learn more about that. And then we'll be back again on Monday with our usual assortment of content all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.